Hi, I'm Owen, the host of the Australian Finance Podcast. This podcast is proudly sponsored by BetaShares, one of the leading providers of ETFs here in Australia. Serving thousands of financial advisors and over 1 million investors, BetaShares manages tens of billions of dollars on behalf of investors right across the country. I'm proud to partner with BetaShares on the Australian Finance Podcast, Australia's premier financial podcast, because there is great alignment in the long-term philosophy shared by both businesses. I hope you enjoyed this episode of the Australian Finance Podcast. Phil, how are you going?
Great. How are you?
Pretty good. Starting off great.
Yeah, I'm always great.
That's good.
Yeah.
It's good. You got your fun shirt on there.
Fun shirt. It's Thursday afternoon.
Yeah.
We're going to an event tonight, so I'm doing great.
There we go. I like that energy. So we're talking about Skye, the business, being your business. I want to talk broadly about that. You're in the personal insurances / life insurances game. We're going to talk about kind of the specifics of how you manage your team.
Yep.
You're very well known in the finance and financial planning world. You guys only do insurance, first of all, for anyone that's needing to frame this conversation. But you run effectively a services-based business.
Yep.
You've been doing it for quite some time. And everyone who does know you sees you as really relaxed. You rock up to these events. Everyone seems stressed in finance. You're just like, you stand out as like this really happy and just kind of optimistic guy. So I want to kind of dial into that because I know you manage a pretty big team. Like your business is pretty big.
Yeah.
How many people are in your team?
Yeah. So at the moment, we've got over 55 team members all up in the whole business.
Oh, wow. Yeah. Okay. So normally that comes with like hair loss, like I've got, not a long, like hair down to your shoulders. But where did it start for you?
Yeah, so it started as back in 2012. I was working for a single owner and I was the only staff member practice in advice, doing holistic advice. And that guy decided to get out of advice. And so he tried to sell externally. And then after he said that fell through, I just said, well, why don't I buy it? As a 24-year-old with no money, no ability to buy it, but I threw it out there, and he was like interested, and we started talking, working out how we'd do it. Anyway, and then so I vendor financed the first half. We went 50-50, and then the second half was literally 4 months later. He was like, I'm definitely out. You know, there was a lot of changes in financial advice around that time.
Yeah.
And he was a bit concerned, worried about what that would look like, what the value of the business would be. And so he decided to get out of the business. And then I borrowed money off my father-in-law to buy him out and still vendor finance some of it. And then we was looking after a small client base, really small revenue. And it was just myself. And then doing holistic advice.
When you say it was a small client base, how many clients are you talking about?
It's a good question. All up, it was probably like 60 clients in total. Some were like insurance only, but majority was like couples, paying fee for service, looking after their investments and super.
Okay, cool.
And low value in terms of fees. The fees were average probably $2,000 per couple.
Right, per year.
Per year, yeah.
Yeah, right. Wow, okay. And then, so you said you vendor financed it. You vendor financed 50%, which for people's understanding basically means that you used the business itself to float the purchase of the business.
Yeah.
Can you explain the mechanics of that?
So basically it was like I had a loan to the old owner that I had to pay out for 50% of it. And then the second 50%, when he was completely out, he had no control over the business. And so he wanted the second payment to be cash. And so that was just a way of financing me into the business. As I said, 24, no money, had one kid, another one on the way. And so then the second tranche was, hey, I need to see some cash. And I was like, okay, let me work it out. Do I go to a bank, work out what the terms are there? And fortunately, my father-in-law had run an accounting business. So, and my brothers and sisters-in-laws, all I knew had borrowed heaps of money off him in the past. So I asked him for the money and he was like, look, if, and I married his youngest daughter as well, so his baby.
Yeah.
He's like, look, if you're confident enough to ask me for the money, and you think you can do it, then I'll lend you the money.
Okay. Wow. Pity you didn't get equity in what you ended up building next.
Yeah. Well, I mean, he got a good deal at the end of it. Like we had a loan for quite a number of years. Every single month I paid him, interest only, for quite a number of years, and every single month I paid him the exact amount, and it was well above his interest rate on his loan, and to be honest, above a bank interest rate, which we could have gotten a bank loan. So he did well out of it. But it was also just this trust building exercise where he was like, well, I trust you. And it made me really make sure I've got my cash flow well so I can pay that bill. Yeah. No other bill mattered as much as making sure I paid that back.
So what happened next? Like you bought into that business, you're 24, you got a kid, another one on the way. Hell of a time in your life. How did that business go and what did it become?
The business did, we flatlined. So basically I took over the business and I was really worried about losing everything. Like it was more money than I'd ever borrowed in my life. It's to my father-in-law. So there was a big commitment there. For 6 years straight, we didn't increase our revenue. Over 6 years, we increased by 6% in total.
Wow.
Yeah. And from a low number, plus 6% is still a very low number. So
you were at I'm going to guess 120, 150,000, maybe a bit more.
Yeah.
And then you went up 6% of that.
Yeah. So there was almost no growth in that time. And I tried a lot of things. I'd done a lot of things and then went to, I was working with the existing client base and we maintained majority of the client base. We just weren't bringing on any clients. And then I was getting really frustrated with how hard I was working and there was no upside. And, at 150, I think it was around 150K, you're not making much money when you're paying compliance and you're paying all of these costs to run a financial planning business. So I talked to my wife and said, look, I'll give it one more year because I'm an optimist. I always think it'll get better. And I'd always said that to my wife, it'll get better when this happens. And it didn't. And instead of getting frustrated or depressed, it was always, it'll get better when this next thing happens. And so I was optimistic of the future. And then, one point in time, I just said, I'm going to get out of advice in 12 months' time if it doesn't actually get better. I need to stop chasing this, it'll get better, and make changes.
So that would have been 2018-ish?
Yeah, 2018, 2019 is when I just said, look, something's going to change. And then, really what changed was there was a lot of opportunities like Glenn James, but, our mutual friend was doing a podcast and he was getting a lot of traction around that time. That's when Finfluencers started, becoming a thing. And so I had, just started, connecting with these people who had audiences, and then realizing they already built networks of advisors in their group. And the way in which I could, differentiate is if we go insurance only. So that was one reason we did that. The other reason is the market and requirement for personal insurance, it was only ever going to grow in terms of the consumers need it still, and it was going to grow. The wealthier we get, the more we need insurance. But the supply had plummeted. So there was a few things that happened in the industry. Commission rates dropped by half what they were previously. So it becomes significantly less profitable to deliver that service. The other thing was the education standards came in financial advice. So a lot of existing advisors in the market who didn't want to pursue those education standards, I knew that they would leave, and they were predominantly insurance advisors. So the supply of insurance advice was going to fall off a cliff, but the demand was going to stay there. So that's why I decided to go to insurance only.
So when did you make that pivot then?
So we kind of made the decision in 2020, we rebranded the business.
It's COVID.
Yeah. So we rebranded, and in the rebrand, we were very clear on being insurance only. So it would have been 2019, 2020 when we made that decision. But it was always this, I'd still kept my existing client base. If we got a lead that, needed other services, we would still offer, that service. But yeah, it was 2019, 2020, but 21, I think July 2021 was the last non-insurance only advice I'd provided.
So then I didn't know this whole thing with Glenn James from Money. Folks, Great podcast. If you're listening to this, that's a great one too. So you kind of met Glenn, and then
Glenn was an ex-advisor, has been advisor. If you ask me, ex-advisor. So we knew each other in the industry. So we were similar ages, running around the same circles within the associations. So we were both quite active within the associations. So we'd known each other. We'd gone to FinCon. I went to FinCon in 2017.
In the USA?
In the US. And so spent a good amount of time with Glenn there. And so we'd known each other before that. And so, so that's kind of how our relationship kind of...
And then you became a trusted referral partner of the Money Network.
Yeah, so he was talking, we were friends, and I was talking about his journey because he was getting out of advice then and really going all into this space. And so, I was talking about, okay, who are you referring to? What are you doing? What services are they offering? So there was a big convergence of things. And I was, I knew I wasn't the trusted partner for him. And I thought to myself, well, why aren't I the person that he naturally thought he would approach to help his community out? And it was because I wasn't promoting myself very well. I wasn't running a good business that he could trust his clients to. And so again, it was this convergence of things are going, well, what do I need to change to be that trusted partner? Not just of Glenn, but of people where they can feel like they can trust us with their clients. Insurance only, as I said, had this big drop in supply, increase in demand. And I thought I was always very good with technology. I always knew how to use technology and build, not code, but, integrate off the shelf stuff. And I knew the old guard who was doing insurance only they were still doing paper applications with their clients.
Yeah.
And so I thought, if I come in, I can build really good systems. And so the halving of commissions won't impact me as much. The fact that I'm earning no money today won't impact me that much either. So I lent into it. I went all in, even though insurance made like less than 10% of our revenue.
So you were like, even if all of these outside factors kind of are flatlining, and that will, like you said, remove suppliers of advisors, but you'll be more efficient.
And just be known for that thing. And Glenn, in his advice days, he was super passionate about insurance and personal insurance. So I always knew it was a soft spot for him as well. So I could go to him and say, hey, I know you've got these other partners. They're great. I get along with them. We're friends. But, if someone only wants insurance or predominantly wants insurance, maybe we can service them. And, when we started getting some leads here and there.
So one of the things you've chosen to do, Phil, is you've chosen to specifically target insurance when you could do wealth advice, like you said, things like investments, superannuation, cash flow, all those types of things. Why has specialization been important to you?
Yeah. So, I'm a big believer in specialization in all business because the reason why it was great for us is because there are so many problems to solve in business, full stop. And if you have one thing that you deliver and the starting point of every client and the end point, now our clients will start with us and end with us the exact same way. Now, the level of cover they get or the insurance provider that they go ahead with, they can all change and they're all different and it's all individualized and tailored to them. But we know their process from start to end. And so specializing just helps us really clearly identify where are the gaps in our process, how do we make them better. Now, you think about if you offer two services, now someone can take service one on their own or service two on their own or service 1 and 2. So that's 3 different process maps that you've got to have just for having 2 services. Have 3 services? Well, again, you can go 1, 2 or 3, 1 and 2, 2 and 3. Like you think about it, just forks out from then. And when I was doing holistic advice, it's just your list never stops on what to improve. And you're also not focused on how do I improve it? And so, specializing in one thing has really helped us go, because our list doesn't get shorter either. Like we only do one thing and we do it really, really well, but we want to be excellent at it. Our list of things to improve still gets longer, but it doesn't fork out into literally 10 process maps per, depending on what the client wants.
We have an accounting partner at Rask, which is Grace Space Advisory in Sydney. And you've probably heard this 3 times today already, but Like, can you help me find a good accountant? Like, keyword good. And I think that most accountants, to be honest, are good. They just don't know how to scale. And I was chatting to Jordan, the co-founder of it, yesterday. When I met them a few years ago, they were, I think it was just the two of them. That was probably 3 years ago. Now they're 25, 26. And he gave me a call last night on the way home, and he was like, I remembered a piece of advice you gave me years ago, because we were talking about how stressed we are with trying to scale businesses in this industry. And he's like, the best advice, he's like, you just said it offhand. He's like, will you be able to scale? And that's probably like the key thing is like, even on my side of the fence, like with the community, it's like making sure that everyone is taken care of. And then the service providers on the other side that have really good business, such as yourself, is can you do 10 a month? Can you do 100 a month? Can you make sure that the 1,001 person is taken care of? And that's what's so tricky, like from both parties, because it's like you got to manage all the complexity, but like people who trust us, like or Glenn or whatever, he has to be really careful. I have to be really careful as well, right? So early days, Skye, you rebranded.
Yep.
You got I'm guessing you got like a website, you got like a logo, you got that sort of stuff. What was like the first thing you did? Like what did you automate? Like what did you think, well, this is a bottleneck for me potentially?
It was literally everything in the business. I just tried to so insurance applications, people used to do them by hand. Like these 40-page documents, you used to do them by hand. And if you tick yes, then you have to answer these questions. If you tick no, then you go 3 pages over and keep doing it. So there were options where insurance providers were doing that online or doing that over the phone. So I was like, well, I'm going to do that. I'm going to outsource to the insurance providers for these things. And other things like getting the initial client forms filled in. A lot of people would do that face-to-face with clients, and knowing that the supply was going to diminish, I had pushed that requirement onto the clients and said, hey, you can fill out these, and if you choose not to fill it out, then that's great. You've decided not to go ahead, and we can move on to the next client. So some of these unscalable things that advice firms have done in the past, I decided that I'm okay with a client who says they want insurance and they're telling me they want insurance, but then if they're not filling out a form, they're not that invested. So we're okay to do that. But we kind of tested and a lot of things, I built the most amazing process from start to finish. And as soon as we had 10 clients, it wasn't the most amazing process. And so we chucked it in the bin and redesigned it. And so that was the thing that I was always very good at and still very good at changing quickly to the team's dismay. I'm very good at changing stuff quickly. But that was really helpful, is because you can build the most amazing process, and then once you get clients going through that process, you find out where the flaws are.
Do you, as a person that now has over 55 staff in the business, do you drop into that? Do you be like, all right, are you looking at metrics? Like, how do you determine that something is wrong and needs to be fixed?
Yeah. So I'm glad we got 3 hours for this. So thank you. So there's a few things. We make sure we've got dashboards in our system that tells us very clearly what are the metrics that we really care about. And I remember listening to Elon Musk's audio biography that he talks about in his factory, like everyone is so close to the issue. So you see it really clearly. If there's a red light, you're right next to it, go and fix it there. So we made sure we built these red light, green lights in our dashboards. And so I know our delivery timeframes. And so I can then go, hey, how do we, if this is increasing and getting worse, how do we get on top of it? And so there's that. The other thing I do, and it's pretty recent that I've been doing, is I'm catching up with everyone in the whole business at least once or twice a year. And so like this morning, I had 3 or 2 meetings this morning, and I pushed a few of them for tomorrow, just with everyone in the team. I'll sit down and say, what are your problems? What's working for you? What's not working for you? How are you going with your team lead? How are you paying performance reviews? And I'll grill them for 30 minutes. And then from that meeting, I write heaps of notes on what's working for them and what's not. And then I write next steps for myself, like what action am I going to take off of it? So that's been really good recently, because then I get to really clearly hear what's working for people and then really quickly action changes. So that's worked for me. But I am obsessed with processes. How do we make things better, quicker? and touching on that scalability, I'm obsessed with our client outcomes and making sure our client experience is really good. And I don't want it to, fall down because now we've got thousands of clients. I want it to be just as good as if we had one client. And so, that's the things I'm kind of obsessed with.
Everyone that I see that scales really well in these types of businesses are, one, tech aware. I wouldn't say they're like software engineers, but they're tech aware. If it can be automated, it should be automated. And then the second thing is they're incredibly process driven, because that's how you find what can be automated, I guess, or what should be. And so really, really interesting stuff there. So early days, Skye, I didn't realize that you kind of went on this like gigantic hockey stick of a trajectory. You kind of went to like 2012, just like bouncing along. 2021, 2020, it's just gone voomp, straight up. Maybe just to kind of clarify what I mean by that, can you give us like broad figures of where you are today?
Yeah, I mean, I can tell you exactly every number for the last however many years. So last financial year, we did 4.3 mil. In 2019, we did 170K.
170K to 4.3 mil in 5 years.
I think 6.
Oh yeah, we're in 2025, aren't we? Yeah. Wow. Okay. So you're kind of like, you're like data obsessed.
Yeah.
You're kind of like super tech aware. And then your systems just glue it all together.
Yeah. I think the thing that I'm good at is problem solving. And it's like, how do we solve problems? And that's just, I'm obsessed with how do we solve problems. And so even things like, when we have client problems, I'm like, I want to get involved. I'm not a control freak-ish. I don't
Says
think
every
so.
Control.
Like, because I do give up. I do empower my team to do a lot. And we can't grow like that unless the team are doing it. Like it's actually not really me. It's the team that have grown it. But it's like literally any client complaint, any bad survey result, because we ask our clients to give us, NPS score type of things. Anything that comes in that isn't 5 out of 5, I will email them personally and say, hey, because we ask them, 1 to 5 on certain things and then just give us feedback. I'll email each individual client that doesn't give us 5 and say, can you help me understand this a bit more? Like, can you just take a bit more time to really dive deep on these things? Because I want to know. So like, I'm obsessed with those little things, because one bad client experience is going to kill our whole business. Now I'm optimistic. I'm naturally optimistic guy. So I'm not like freaking out that we're going to lose a business because of it. But I'm obsessed with making sure that we have great client experiences. And if we don't, how do we learn from it? How do we build a process around it?
One solution, at least maybe air quotes solution, that people come up with when they're in a business, in any business, is, I'll just get a CRM. You guys now use HubSpot, right? It's like a centralized tool for you.
Yeah.
We use ActiveCampaign, basically the same tool.
Yeah.
HubSpot's probably going to kill me for that, but basically the same tool.
Yeah, they're all the same. CRM's a CRM, yeah.
Why do you use that? Like, why did you choose that tech stack for your business?
Yeah, so we started on Pipedrive. So we started on Pipedrive, and the one thing, Pipedrive was great in lots of things. The one thing it didn't give us is great reporting. And I knew that if I want to be really close to the green light, red light in terms of like what, if something's wrong, I want to know it straight away. We need good reporting on our CRM. So that's actually why we did this massive transition to HubSpot. And we had, 25 team members at the time. And one thing I'm great at is changing quickly. One thing I'm bad at is changing quickly, depending on what perspective you look at it. So we changed. Everything was on fire. Like, it wasn't a good transition for the team. It wasn't healthy in terms of a culture. And so, I'm great at apologizing these days and learning from my mistakes. But that was one thing that Pipedrive didn't allow us to really clearly identify where the gaps are and where the issues is. And that's why we moved to HubSpot.
Cool. Yeah, because we, obviously Skye, and you are a partner of ours, and you do offer the absolute cleanest reporting to your partners as well, which if you're servicing other community members and the people that service those communities, like that is really, really important, because that kind of gives your partners confidence that you guys are delivering on the expectations of the community as well. So one of the things that is clear is that you seem to have a really great culture around Skye. Now, this could just be a PR exercise. That you're
putting lipstick on a pig.
Yeah, you're the best at PR. But one thing that I know is like your office in outer East Melbourne is modest, right? The way you conduct yourself is modest. But
I'm a simple guy, is what you're telling me. Yeah.
Well, no, you're just not a flashy type of person, which is so often the case in finance. Like this,
a guy sitting with a pink shirt on.
Yes, but you know what I mean, like pinstripe suits, like R.M. Williams boots.
Yes.
These types of things, right?
I'm not a finance bro.
Yeah, exactly. So very counter to that culture. But like, yet you told me off air before that you have, like you've never. I think you heard this right. Like you've never had a advisor resign, which is a huge thing, right? Because we're in a talent, like there's a war on talent in financial planning for people that don't know. Like numbers have fallen by like 50%, maybe even more.
Yeah.
And the number of advisors that then also just want to be specialists in insurance is like a fraction of that. So to do that is super impressive. If you could think about like the high level of the way you think about the culture of the business, how do you think about that?
Yeah. So, I mean, I think, I am looking at these growth numbers. I am always thinking what's happening forward and not what's happening in the past. So I'm not great at celebrating success. But it's the same kind of philosophy with our culture is I think we've got a great culture, but our culture moving forward, how is that going to look? And so I am obsessed thinking about, I don't want to get high on my own supply and be like, yeah, we've got all these amazing things. And so therefore it's going to continue. It's something that we work really hard on. We survey our team every quarter on how they're feeling about all of these things. And it helps us understand the trends. Are we improving our culture or are we going backwards? And we ask questions about your pay expectations. Are we meeting that? Or like just questions that sometimes businesses get scared to ask the questions that they don't really want the answer to. And so I think we've got a great culture. Some of the things that we do is a high level. I don't take myself too serious. I think that really helps build that culture. We've got an office where it's open plan and I'm on a desk just like anyone else, similar to your situation. And so that helps going that, and it's a hot desk. So, there's no special chair or special room that I'm in. That helps understand that no one's above anyone else, and we communicate that. One thing that we do, and it can seem a bit like we try not to talk too much about what we do culture-wise, because we're in this world where we're all peacocking, and I don't love the idea of if I'm saying we do something, I want to live up to it. I don't want my team to say, oh, well, they're saying this publicly, but they're behaving another way privately. Yeah. That's kind of the biggest measurement of failure in my view. But something that we do that can seem a bit wanky, but we invert our org chart where I'm down the bottom. And the reason why we do that is because that the job of a leader at Skye is to serve our team. And so we think about that, we talk about that, how are we serving our team? So me catching up with every team member isn't so they can tell me how good the business is, and they can, I actively ask for negative feedback because I'm obsessed with getting better. And so I think that servant leadership is a big part of our culture. And so our team feel comfortable being able to address any concerns. Hey, you're not doing this good enough. And it needs to improve. I think that's a big way in helping our team culture is how do we genuinely think about serving our team and doing what's in our team's best interest, and that's how we can serve our clients.
Fascinating. You do have the kind of semi-regular things you do annually as a team, right? You do a offsite or a kind of a retreat, but it's kind of you learn and at the retreat as well as having fun, right?
Yeah. So, I mean, twice this year we're doing advisor offsite. So just the financial advisors come together because we are, a hybrid business. A lot of our team members are fully remote. Yeah. So we bring the advisors together twice a year. And that's just an offsite. It's CPD learn, continual professional development, as well as how do we just bond as a team? How do we get better? How do we get smarter as a team? That stuff's super important. We've got a young team predominantly. And again, we don't take ourselves seriously. Like if me and Trent, who leads that team, are going to ask anyone to do something, then we need to be doing it. And we need to be the most, like Trent in one of our last in our last offsite, we didn't have enough beds in this house that we got. And then Trent just blew up a mattress and slept on it. And I was like, I'll sleep on the mattress. I'll sleep on the blow up mattress and you can have a bed. And we were fighting over who's going to have the worst bed. And then the one before that, same thing. It was just about how do we make it comfortable for our team? How do we serve our team? And if there is anyone, foregoing anything, it'll be me or Trent who will give up whatever we need to.
I heard a really interesting thing this morning on another podcast that I was listening to. The business owner said, friends don't quit each other. And what he was referring to is like, if you create camaraderie and really good friendships in your team, they don't quit. They don't want to leave. It's not leaving the business, it's leaving their friends. And they just don't want to do that. So they won't. And that relationship between staff is really important and team members. And he was joking on this podcast. He said one thing that they do to foster that is that if you go any combination of 3 or more people, if you go to dinner, to lunch or anything, it's on the company or it was on him. So he genuinely is trying to grease the wheels to forge connections between people, because the bigger goal is friends don't quit each other. I think these kind of like little habits that businesses form are really, really important. And I think that they kind of increase the kind of talent density as well, because everyone's kind of responsible to each other.
Yeah.
What about then, so you've got this upside down
org chart.
You've said to me before that you treat the team kind of like the most precious piece of equipment. You said that like you kind of have to service a piece of equipment. Like if this was a factory, you have to service it. So I guess one of the ways that you do that is through like pay, like their salary and incentives. So how do you think about that?
Just so that doesn't sound really bad.
No.
Just clarify.
Yeah.
So the team are the most expensive part of my business. In professional services, salaries is going to be the most expensive. If I had the amount of salaries that we're paying out, if that was for a machine that helped us run the business, we would be getting people in, servicing that machine and making sure it's running perfectly and swimmingly.
Absolutely.
So early on, we brought in HR consultants into our business, like when we had 12 people in our business, because I understood that as long as we can serve our team, then they're the ones really growing the business. They're the ones, developing it and looking after our clients. And so, things like those advisor offsites. Our Filipino team, they do quarterly offsites, like in their cities that they're in, and so they come together every quarter as well. So they're the type of things that build that relationship. And it's just a matter of like just putting effort into caring about your team. And sometimes when business owners talk about this, there's kind of this underlying assumption that other businesses aren't. There are so many other businesses that have amazing company cultures that I can learn from and I want to continue to learn from. But the things that we think about is just having candid, honest conversations with our team, even if it's difficult and hard. If they're underperforming, let's have the conversation. If they're doing great, let's have the conversation. If we're underperforming, we want to foster that conversation. And so, we do quarterly all hands meetings and after it, I'll always message 3 people who don't directly report to me, on top of the people who do report to me. How did it go? What's your feedback, good, bad, or otherwise? And especially the newest team members, I'll ask them, just so it fosters this relationship of, I want feedback because we want to be excellent at Skye. And so then they're always a bit cagey, like, do I really give real feedback or do I just give the positive stuff? And so if they just give me flattery, I'll say, no, like, tell me what we could do better, because I'm kind of like, I am internally optimistic, so I don't get personally down or disheartened if we do something wrong. It's just a matter of how do we just get excellent at this, and we want to continue to be excellent.
It sounds like a lot of this though would come, if I put my skeptical hat on, would come from hiring great people in the first place. So what happens if someone's not right? Like, how do you find that? And then how do you manage that?
Yeah, so it's a good question. I am not a great hirer of people. I just being an optimist, I think everyone will just do amazingly. Like, why wouldn't they be excellent at this role? So it's bringing external people in who are better hirers than me, and team members who disagree with me on talent. So Taz in our team is great at just like at the end of interviews, I'll do with Taz. I'll be like, oh, they were amazing. That here is good, and she'll be like, well, but how did you think about this, and this? And I was like, no, I didn't at all. And I'm so glad you're in this interview to pull me up on it. So it's like hiring's super important, and then getting rid of people is really important. And I think I like to read a lot of audio books. Good to Great is a great book that talks about making sure you've got the right people on the bus, and then making sure that the right people are in the right seats on the bus. And if they're in the wrong seat, then move them to the right seat. And if they shouldn't be on the bus, get them off the bus as quick as you can. And so it's a really painful lesson, and it's something that we try and be really good at making sure we identify that people aren't the right fit early, and then just having robust conversations and about why they're not the right fit and getting them off the bus.
Fair enough. One thing that you emailed me about ages ago is pay transparency. What does that look like? Yeah,
so there's a few things. So we have very clear guidelines around what our pay brackets are. So it's being very clear. It's like financial advisors are kind of an easy one for us because it's based on experience, and then once over a certain number of years, it's just based on how it's not revenue linked. It's not like how you make X amount of revenue, you get a percentage of that, but it's that is the measurement of an advisor in our business. But yeah, those career goals, from being an associate to going through your professional year to the first few years, we're very clear on what we pay. We're very clear on what expectations we have of those team members, and we're very clear on what development are we going to invest in terms of coming along to their meetings and giving them feedback. So there's that in terms of pay transparency. We're clear around those levels and what that looks like. The other thing, and I say this semi-flippantly, but in a very legitimate way, is I have no concerns talking to anyone in our business about their pay and about why someone else is paid more or less than them. The thing I do say is, don't get offended when I say someone is more valuable to the business than you are. Mm-hmm. And so it's legitimate. I will welcome a conversation about pay, and we have it all the time. We've got 55 plus people in our business, so we were talking about pay all the time. But it is a matter of, if you have a conversation with a colleague and you're concerned that you're not getting paid as much, bring it up. I want to hear, what you're not, where your frustrations are. But you may hear that they're more valuable to the business, and I'll clearly articulate why they're more valuable to the business. And that may be hurtful to your ego, but we're all adults. And so pay transparency is, super important to just very clearly articulate. The other thing we do is annual pay performance reviews every single year on the dot. There's no, we can have pay discussions outside of them, but it's like every single year we make sure we have those conversations.
Yeah. Yeah. What are those pay reviews like? Like, what do you instruct staff, and do you have like a proactive approach, or are you more passive and let them talk openly? Like, how do you actually structure a pay review?
So in terms of our business, so we do think about like broadly, what is the market doing in terms of like, are we underpaying, are we overpaying? And there are, some of our positions, we know we're under market value, and we clearly tell, our team, hey, we know you can get paid more somewhere else, and this is why we're under market because of these factors. We're 100% remote as an advisor. And so some of our team will go, yes, I'm opting into that, and I totally understand that, and because it benefits me personally, or actually I want to go somewhere else.
I want to go work in the city 5 days and make a bigger wicket for a couple of years or something.
Exactly. Yeah. And great. And so we're very candid around that in terms of, but the other thing is, where's the business? Is the business making money? If the business isn't making money, then there's no, we've got to be candid about what we can and can't pay. Fortunately, the business is doing well and has been more profitable every single year for the last 6 years. And so we structure it in terms of, as an organization, we kind of work out, what do we think as a leadership team our pay bands will be in terms of the pay increases. And then we give it to each team lead who has their team, and then they can distribute their bucket of money according to their team.
Okay.
Now they've got to report back to whoever they're reporting to and get a gauge, so it's not just they're your best mate and you're giving them a massive, like you've got to be accountable to the pay rises, but we give them a lot of latitude in terms of if you're managing your team, you know their performance better than I do, so I'm not going to tell you what you can and can't pay someone. And again, it comes down to some of these team members are hugely valuable to the business, and we look at that, do a pay review, and we go, actually, you're underpaid by a significant amount, so we will bump it up because of your value you bring to the business.
How did you go, and this is probably more so if you're giving me advice right now, Phil, how did you go from solo business owner into a leader of leaders, or a manager of managers, or a leader of managers?
With a lot of help. I ask questions. So I guess one of my superpowers is asking questions.
You do ask a lot of questions. Yeah. I know I'm asking the questions right now, but normally you ask all the questions.
Yeah, and that helps me a lot. Like I just want to learn from people who are much smarter. Like most people are much smarter than me. There's heaps of people who have done this before me. So I'll ask from guidance from people who have done it before, but I'll ask guidance for, professionals. As I said, we brought in HR support into our business when we had 12 people, and we still supported by those people still today. So there are things about, how do we do better one-on-ones? What's the best org structure? And we listen to them, and then we try and test and measure and go, okay, maybe this team member, this leader is got too many people reporting into them. Can they really support their team if they've got this many? Or do we need to do a restructure of some of the teams? So it's just about asking questions. I'm very, very curious to understand people's point of view. I just want as much data as possible. And then it just gets mushed in my head. And then we kind of, bring it to the team and go, this is kind of where we're thinking. What do you guys think? And then we execute from there. But we've got great people, and we have high expectations. We're growing quickly, and we want to be the best. We've got we're incredibly ambitious as a company. And so that means to be ambitious, you've got to look at where we're not doing great and how do we fix that.
What does that look like? I think you were just telling me off air that you have like a goal for 2027 or something like this. What does that look like? What does an ambitious goal look like?
We want to be number one in the country in our niche, which is insurance advice. So we want to set up the most new policies of any other advice firm, actually any other AFSL, so licensee in the country by 2027.
So where were you now? Where are you now, and where would you have to get to?
We're like 13 to 15 now.
In the number of firms?
Oh, so we've got to grow 3x. In terms of the amount of new policies we're setting up every year. So,
right. 3x, right. Because you showed me an industry report once. There are industry reports so you can get a gauge on other firms and that sort of stuff.
Yeah, that's where I get the numbers from.
Yeah, okay. Wow, okay, that's pretty impressive. So when you do that, you said before to me off air that you work backwards from the target. What does that look like, that process?
Yeah, so I'm so new at this. I've got no idea what I'm doing. I'm sure you feel the same thing. Like you're building something new. You've never done it before. You're making it up most of the time. And so that's how I feel. But the way I'm thinking about it is, what is our target? I'm ambitious. I want to be number one. And I feel like we can get there. I don't want a target that's well over and above what we can actually reasonably achieve. So we want to be number one. I know the target of that is. And then we've gone backwards. We discussed this 3.5 years ago. This is where we want to be. And then we've gone backwards and said, what does the team need to look like in that financial year? And we then worked out what's our average client premiums and how many clients do we need to work with. And then we worked out what the team size needed to be. And then we worked back and hired up until that. And so there was a big faith that we will hit those numbers because it's a big bet in terms of, squeezing our margins a lot to get to that team size. But once we hit that, then we're comfortable we'll be able to be number one as long as everything else in the business works well. So with the key leaders, I say to one of my team, if operationally, if we can't execute this operationally, then that's on you. If we can't execute it because we just don't have the amount of clients in the business, then that's on me. So we'll know who's at fault at the end of 2027.
Yeah, okay. So you're in charge of bringing the clients in. Everyone that listens to this, you can help Phil out by heading to the Skye Wealth website, or just follow the link in your podcast player, and you can get insurance advice. Life insurance, income protection, trauma, child's cover. What did I miss? TPD.
TPD. Yep.
TPD. You can get all that by following the link in the player. Right. So one of the things that you also said to me in the past, which is quite unique, and I think we're going to bring it in here, shocker to the team. Now they know, some of them do, is you guys use like Time Doctor, do you?
Yeah.
Because you've got a massive offshore team.
Yeah.
I guess there's a few questions around this, but the first thing is Time Doctor. There's been a few things, like controversial things out recently about like screen monitoring software and all this sort of stuff. But you, if I'm not mistaken, have it for the offshore stuff, but also the Australian-based stuff. Is that correct?
Yeah.
Why?
Well, I mean, it's actually coming back to this culture conversation of we were very, very intentional. We do not want it to feel like offshore, onshore team. Like, because a lot of companies who do offshore, it's like, well, they're different people, and we're the real company. And we just use them to help scale us. And just from a human level, just feels so incredibly disrespectful to the people who are helping build our business to say, you're not the real team. And so we've always been very intentional. If it's good for the Aussies, it's good for the Filipinos. If it's good for the Filipinos, it's good for the Aussies. So,
yep.
And we behave that way as a culture. As I said, we're here to serve our team. And so therefore, if we have a advisor who's working with a client services, officer, the advisor's there to serve their team, to help deliver the advice to our clients. And so that's kind of our philosophy, is that I don't care where you live or where you work or whatever, you're all just as important. Now, you may bring less value to the company than someone else, and that's why they're paid, their remuneration may be different. But that's been the philosophy. And so therefore, can we do, screen monitor? Can we monitor our offshore staff and not our Aussie staff? It doesn't really make any sense to me. So that's why we just do it company-wide. And really, can be pretty invasive, checking, monitoring every minute of what I'm doing. We don't use it like time tracking in terms of you got to work out which clients you're working with or whatever. It's really just there to go, if our dashboards say that you're underperforming, then we can use Time Doctor as another measurement to go, actually, maybe there is also additional underperformance.
Yeah.
And so I've never looked at anyone's Time Doctor unless there's been real underperformance.
Yeah. Okay. So the other question that then falls out of that is, if you've got this big offshore team and you've got the Aussie team, how does that work in terms of like the management, the reporting lines? Like, you're obviously not in the Philippines right now. You're sitting here in Melbourne.
Yeah.
Do you have like a manager based there? And I think you said to me in the past, there's some of the people from over there can manage team members in Australia too, right? So it goes both ways.
Yeah. A team member's a team member. I don't care where you live. So yeah, we don't have any issues, concerns of Filipino managing an Australian team member, and vice versa. So if you're capable and you can fulfill that role and you happen to live in the Philippines, well, great, manage these people. Yeah. If you amazing, you're capable, and you want to serve our team, and you live in Australia, and your team happen to be Filipino, great. Who cares?
When you set that up, was there like a manager that you used to help learn to grow that side of your business, or?
Yeah, so we started with an outsourcing company, and one of the biggest hesitations was really about how it was an us and them kind of a thing. Well, they're not really our team, they're your team, and they had to go to you for pay reviews, and you block those pay review conversations before it came to us. So there was always this really weird interaction there. So we are about to set up an entity over there, but we were just doing independent contracting with our team. Yeah. But again, our team, they work with us directly. They are part of the team. We incentivize them, part of the team. So it doesn't matter where you live.
Okay, so you've got that kind of vision for the future. You've given us a great breakdown of the business, like how you operate as a team. Is there anything else that you would say is like something that you do differently to other advice firms? Like, obviously you're here in a fun shirt, but is there anything else that you do that gives you an unfair advantage?
I think like just not taking myself too seriously helps a lot. It helps a team also not take me too serious. Like, can you really, if you're CEO of a company and you're wearing suits and tie every day and you're looking schmicko, can your associate who's like, 21 years old, call you out on any poor behavior? It's very difficult for them to, unless you don't need to look, like, you can still wear suits and foster a culture where people can feel comfortable calling you out on any poor behavior. That's the thing that, and we call people out on poor behavior all the time. If there is something that we need to call people out on, then we do that, because we also have a real clear expectation that they will do the same to me. And so, yeah, I think we just take ourselves too serious in finance. Like, we just got to chill out. We're here to serve our clients. We're here to help them, achieve their goals, whether it is wealth goals and, in holistic financial planning, or whether it is, I need a really good insurance policy that I hope I never claim on, but if I do need to, then it's there to pay out. Great. We're here to help. And so, I talk about what we do is incredibly important. The way we behave and the way we do it isn't that important.
Okay. Really like that. Well, there's so much more that we could talk about, but I really do appreciate you going deep on all these things, revealing a lot about the business too. And I know, like, you're really widely followed in the financial planning industry, so I'm sure people who already know you will be really appreciative that you've taken the time to step through your business, but also people in adjacent industries, a lot of service-based businesses, and ultimately people listening to this can reach out to Phil and the team to get advice on insurance. So you can head to the link again, and that is, we're referral partners, so we benefit from that at Rask too. So it supports us, which is great, and really appreciative of your support. So Phil, lots of fun, mate. This has been great. So thanks for joining me.
Thanks for having me.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.